right, Kelsey, welcome back to Business by
Thank
the
you.
Books.
I feel like it's been so long since I've been on.
Yes. All right, so today we're going to be talking about LLCs first, S Corps, when to become an S Corp, some of the benefits and drawbacks of becoming an S Corp, and an updated stance. Kickstart and KSA Tax Partners has made a pretty big shift in our stance around S Corps and reasonable compensation over the last year. So today we're going to be updating the listeners and our clients on some of those updates. So let's start from the beginning. What is the biggest overview that we have of what an LLC is versus what an S Corp is?
Yeah, so an LLC, also known as a limited liability company, is really just a legal protection for that business. So what it's going to do is, from a legal standpoint, separate your business from you personally. So if someone comes after any debts of the business, if you are an LLC, they can't come after you personally.
And this is a big reason why we tell people that stop commingling. Once you become an LLC, if you continue to commingle your business and personal expenses, you are piercing the corporate veil. So now when somebody comes after you, you've just exposed your personal liabilities as well. So once you have filed to be an LLC, stop commingling your business and personal. Your business checking account is not your personal bank account. Stop using it.
That's right.
Like that.
If you're going to go through the trouble of creating that LLC, you want to make sure that you're protecting its integrity and the purpose of creating it, because being an LLC actually doesn't change your accounting in any way. It only changes from a legal standpoint.
And let's just touch on, so if you are an LLC who's listening, how do you pay yourself? Because if I'm telling you can't put personal expenses to your business checking account, how do you pay yourself as
Exactly.
an LLC?
So that's going to be in the form of an owner's draw, owner's distribution, however you want to call it, but basically getting money from the business over to your personal account. And then all of those personal expenses will come out of your personal account. So the business is still funding it, but it's not coming directly out of that business account. You're just transferring it over, writing yourself a check, Venmoing yourself, however you want to get it from the business account to your personal account. That's known as an owner's draw, and that's how you pay yourself as an LLC. So you should not be running any payments to you through payroll as an LLC.
And you're not paying payroll tax on it either. So that's a big question is, am I paying tax every time I take an owner's draw? And the answer is no, which is why you're not putting
Correct.
it through payroll.
At least not at the time of payment. We'll kind of get to it, but you will at the end when you file your return. But that's correct. You won't have like any taxes withheld from those withdrawals or anything like that. Another question that I get asked is, am I considered a contractor when I pay myself from my business? And the answer to that is no. So you're treated a little bit differently because you are the actual owner of the business. So you won't have to issue yourself a 1099 for the business or anything like that. It's all taken care of on the actual tax return.
All right. So as an LLC, how do I pay my taxes? Because I know the IRS is getting theirs. How do I pay taxes then?
So all the business activity is actually going to go on your personal return. So remember, being an LLC is only for legal purposes and doesn't change the accounting in any way. And that translates over to the tax return as well. It doesn't change the accounting whether you're a sole proprietor or an LLC. It's still going to go on your personal tax return. And that's going to be on a special form called Schedule C. And this is basically just a profit and loss statement of your business income and expenses. So all of your income will go on that Schedule C. All of the business expenses your business has incurred will go on that Schedule C. And what's left over is that net income. And that net income is where your tax liability will be generated from. And being taxed as an LLC is a lot different than an S Corp. So because you're not having taxes withheld from your owner's draws throughout the year, you kind of true it up when you file your tax return. When you're an employee of a company, you pay Social Security and Medicare, and then the company pays Social Security and Medicare in the same amount. It's employee and employer FICA tax is what it's called. As an LLC, if you're just an LLC, there's no one to pay that employer portion. Like Danielle said, the IRS wants their money. So you'll actually pay it on the tax return. So as an LLC, you pay employee and employer Social Security and Medicare tax on the entire net income of the business. So,
And this is a big change for people because historically, with growing up, most of us work as an employee. So suddenly you start your own business, and that is a giant shift in a complete mindset shift. And why we reinforce saving for your taxes all year long, not just paying your estimated taxes. We include a tax reserve on every single one of our snapshots because we know that if you're doing better this year, you need to be planning for that. And I completely understand as an LLC creative person, you're not thinking about what that tax bill is going to be at the end of
That's
the year.
right. And this is why you really need to make sure that you're not just a business owner, you're an informed business owner. So making sure that you have a touch point with your tax team, or at least have some type of inkling of what your tax liability is going to be, will help make sure that there's not a surprise at the end of the year, because as an LLC, the tax liability does tend to be a bit higher.
Yeah. Okay. Let's talk about what is an S Corp. What is it? How does the payroll differentiate? And then we can talk about our change in
Absolutely.
stance.
So S stands for small business. So it's basically a small business corporation. And with that comes a little bit more responsibility as a business owner. So this is kind of like the next level up in the journey of owning a business.
I like that. LLC S Corp is the next level. I like that.
And with being an S Corp, there's a little bit more restrictions on what you can do, what you can't do, and what you have to do. So as an S Corp, if you are the owner of the S Corp, you have to pay yourself through salary. So not just owner's draws, like when you are just an LLC, but when you are an LLC taxed as an S Corp, you now need to be put on payroll. A question that we get asked often is how do I put myself on payroll? And this is something that's easily outsourced to something like Gusto. Gusto is our preferred payroll provider. And they file and pay all the payroll taxes for you, very cost efficient. So I suggest outsourcing to something like that. Then get it all set up for you.
Absolutely outsource to someplace like Gusto. I know there's still some old school CPA firms who are handling that. But I think Gusto really allows you as a business owner to be very professional. As you become an S Corp, you are probably hiring more employees or thinking about hiring your first employee. And a system like Gusto will help level you up as a business owner to really look professional so that your employees have a way of pulling their paycheck stubs, their end of the year reports, and Gusto allows you to continue to grow as a business owner. Once you have become an S Corp, do not skip the step of going on payroll. That's something that has scared me over the years, is how many clients who've come in that say, I think my CPA filed some S Corp paperwork and I'm not on payroll. You are required to be on payroll, and you as the business owner, you are responsible for yourself. So the IRS says you went and filed an LLC, you became an S Corp, and you are now responsible for yourself, not your CPA. So make sure that you're taking ownership of that.
And you can implement a system like Gusto even before you put yourself on payroll. So you can have employees not as an S Corp, just as an LLC, and you can have something like Gusto. But you'll have to pay yourself a salary through a payroll provider like Gusto. And the IRS has guidelines around how much that is. There's restrictions on how you can pay yourself. So yes, through officer salary, but you can also pay yourself through owner's draws. You just have to make sure that you're following the guidelines around when and how much. There's also some more stringent restrictions around personal expenses. So while yes, there are implications of having personal expenses through your business as an LLC, there's even bigger repercussions as an S corporation if you have your personal or anything not related to the business within that. As an S corp, there's also the added element of basis. I won't go too much into it, but it's just an added thing that could trigger personal tax liability. So you really want to make sure that from all points, it makes sense to become an S corp. And this is kind of where our stance has changed.
So let's hang on basis for 1 second, because one thing that I've heard throughout the years is once you become an S Corp, having bookkeeping is a non-negotiable. Yes. So you have to have a balance sheet, and you have to have a balance sheet that's accurate. When we have business owners who come to us who say, I've been doing my own bookkeeping, I think I've been doing a really great job, I think I'm in pretty good shape, And when we start to dig into their books, we're like, oh my God, how are we going to tell them that this is very wrong and that the balance sheet needs so much cleanup work? And so it's really important to have clean bookkeeping, I think, from day one, but especially from day one of your S Corp
Mm.
formation, because you have to have that balance sheet in order to have the basis that is accurate. So I think this is the reason why people say that once you become an S Corp, having a bookkeeper or clean bookkeeping is no longer
Very
negotiable.
true. And basis is something that is required by the IRS to be tracked every single year. So you have to make sure that it's tracked correctly. Because if it's not, this really could be to your detriment down the road. If your basis is not tracked correctly, it could affect how much you could get from your business. It could affect um, your how much you can take in distributions. It really can have a negative effect. So great point. Having that bookkeeping is going to be absolutely necessary as an S corp.
So let's talk about reasonable compensation, owner's draws, and then I think that'll lead into our stance change. So the IRS has continued to crack down and change their stance on reasonable compensation. So as a business owner, you are required to pay yourself through payroll the equivalent of what you would pay somebody else to do that position, and this is based on your location. We use a tool here at KSA Tax Partners to help us be able to give every single one of our clients their reasonable compensation report. And we just think this is so important because once you have this paper, you can really take out as much in draws as you can without negatively impacting your basis. But we need to be paying ourselves enough through reasonable compensation. Kelsey, what happens if I became an S Corp, but my industry had a downturn? I'm having a slow season. What happens if I can't pay myself that reasonable comp?
So the IRS says if the business cannot afford to pay yourself a reasonable compensation, that's totally fine. But that just means you cannot take owner's draws. So if you cannot pay yourself the full reasonable compensation amount, you should not pay yourself $1 in owner's draws that year.
One thing that we saw over the last few years, especially through COVID, so there was a lot of industries that we worked with that had an incredible economic boom, and they had some really good years where it made sense in that year to think about becoming an S Corp and for it to be tax advantageous. However, as the market renormalized and re-regulated itself, and this isn't across industries, this isn't across all of our clients. However, we are seeing that some businesses are having a difficult time paying themselves that reasonable compensation. And therefore, it's difficult to say, I need to take $5,000 for my personal life, right? Like my personal life, my personal bank account needs $5,000. If I take that through reasonable compensation through payroll, I'm going to have to pay payroll tax on it. So I'm not getting $5,000. So I really need to include payroll plus like the amount of money I need plus taxes. And if I only have $5,000 to give myself, it's really tempting to say, I'm just going to take this as a draw because I need all $5,000. And while I'm empathetic to the situation, I understand it's actually just not allowed. We have to act responsibly as business owners. And I think this is really what's caused us to change our stance as a firm on how we guide clients through becoming an S Corp. So Kelsey, do you want to talk a little bit about how that stance has changed?
So IRS guidelines change all the time. Markets change all the time. And with that, if we're keeping up with how everything is evolving as we should be, your guidance should change along with that. So in the past, we've had a few general criteria that we look for before recommending a business elect to become an S Corp. And those have always been, are your personal expenses separate from your business? And that one still stands. Can the business afford to pay yourself on a regular basis? Because if your LLC can't afford to pay yourself owner's draws regularly, how could it afford to pay you a salary on a regular
Right.
basis?
We'll get back to the show in 1 second, but real quick, are you a business owner feeling overwhelmed by your finances? Do you find yourself wishing you had more control and understanding over your money? Managing your business finances can often feel like navigating a ship through a storm without a compass. But what if instead you could master your business finances in just 5 days? With the confidence to manage your money, make informed decisions for financial stability, and implement strategies to increase your profitability effortlessly. And that's exactly why the 5-day video bootcamp was created. It's a comprehensive course designed to empower you with the foundations for financial success. Throughout the bootcamp, you'll learn the foundations, how to manage costs for profitability, evaluate investments for growth, and avoid common financial pitfalls. So if you're ready to take charge of your financial journey and rewrite your success story, head over to esuite.co/5-day bootcamp or click the link in the show notes and sign up for the bootcamp today. Okay, back to the show. Those are two things that it's just like the diet's going to start on Monday. I'll go for a run on Monday. Like I get the intention, but if we're not doing it today, becoming an S Corp isn't suddenly going to make your business capable.
Exactly. So those are two criteria that still stand. The one that's evolved is the net income level that we look for as an LLC. So in the past, we've said around 50,000 is when we find it most tax advantageous to become an S Corp. However, we've noticed that reasonable compensation amounts have come back a lot higher than they ever have. And the reason for that is because an element that goes into the calculation is from a wage database. So average wages in your industry and your location, all of that goes into the calculation. And as we know, the wage market has blown up in the last couple of years. And that has caused the reasonable compensations to come back pretty high. So we have kind of updated that to be closer to 80, 90, maybe 100,000, depending on where you live, is when it starts to become most tax advantageous for you to become an S Corp. So that threshold that we're looking for is a lot higher.
And I really think it's for your, I don't want to use the word protection, but if your business can't afford to pay you, the owner, a reasonable compensation, you don't get to enjoy the benefits of the accountable plan. You don't get to enjoy the benefits of owner's draws. And if we can't enjoy those benefits, it's not the most tax advantageous. Now, if somebody is experiencing that slowdown this year and they are having a hard time paying themselves their reasonable compensation, what can they do? Should they remove their S Corp election? I don't want anyone to overreact on a down year, right? Let's hang tight as entrepreneurs. So how can they take action without overcorrecting? Right.
So if you're in a first down year, I say sit tight. For the most part. So there's a lot of factors that go into this decision. A lot of it is future plans. If something's happened in your life and you're really, planning on stepping away from the business on a long-term basis, then revoking the S Corp would likely be the best move, but that's something that we can, assess on an individual basis. But in general, if the market, your industry is having a down year, sit tight. There's no need to revoke the S Corp status, today. But if it happens a second year, maybe even a third year, we'll start to take a look at, again, industry trends, markets, what are your plans for the business? And then make the decision from there. So you do have options. If you're an S Corp and you're not really experiencing the tax benefits of the S Corporation and is considering revoking, that is an option available to you. The only thing to consider, and something additional to consider, is that you won't be able to elect S Corp status again for that business for 5 years. So this is more of a long-term decision.
5 years is a long time.
So it's something to keep in mind, but you do have options.
Yeah. I think I'm really sensitive to people overcorrecting and taking away their S Corp election, because once you've done that 5-year time period restarting, a lot can happen during those 5 years. And I don't want you to lose out on being able to take advantage. And I think that's, again, why our stance has changed about becoming an S Corp. We want business owners to really be ready. And so we're not going to say, oh, you had 1 year of $90,000 in net income. Let's go to the races on this S Corp election. It's really waiting for that second year to say, okay, we have had several years of growth and consistency. So we're showing that we have consistent net income levels that are gonna support the S Corp election and the benefits of that. You had mentioned it before, and I just want to reiterate again that the IRS does not want you to hurt your business. So if you cannot pay yourself a reasonable compensation, the IRS is not saying to go into debt to pay yourself that salary. It is very simple, like very, very simple. Do not take owner's draws. And if you are paying your taxes through your business account, you need to understand the impacts of that because it's really an owner's draw. You want to speak to that?
So we talked about how the tax liability works for an LLC, but as an S Corp, it's kind of similar. So the income of that business ends up landing on your personal return. The S Corp itself does not pay any taxes, although that is evolving for some states. But in a general, speaking, the corporation itself does not pay taxes. It's what's called a flow-through entity. The income from the business flows through to your personal, and then that tax is paid personally. So if you pay tax liability that may have been generated from business income, but it's really on your personal return. So if you pay that through the business account, it is considered an owner's draw.
And I think people forget. People forget that when they make that tax payment, they're like, my business generated this income. My business can pay for it. And while, again, empathetic, I understand that's not how the IRS treats it. Also, personal expenses. If you are commingling business and personal, those personal expenses, when we are handling your bookkeeping, are including those as owners' draws as they should be. And therefore, it is contributing to that. So it is really important if you're not paying yourself through payroll enough to hit your reasonable compensation numbers, that you're watching where those tax payments are made, and that you're really staying strict on not commingling, so those personal expenses aren't showing up as your owner's
That's right.
draws.
Not only is it easy to forget, sometimes clients just don't know. There's no simple handbook that's like, here's everything you need to know about taxes.
Well, and like we said, it changes.
True.
So also on top of it, they might have known, but now we've changed it.
True.
The IRS has changed and we're changing our guidance. So as business owners, when you file that LLC paperwork, you are agreeing with the government that you are going to now handle those dollars responsibly and to act like a business owner and the CEO of your business, because you are. And that's why we come back here every single week to educate you and stress about how to use your numbers to make better business decisions. And that includes how to have the best tax position year over year. Kelsey, just wanted to touch on the mid-year check-ins for our KSA Tax Partners clients, why we do it, and kind of what we're seeing right now.
So really, we're doing it because we want to make sure that as a tax team, we are keeping up with what's going on with you throughout the year. It also gives you an opportunity to have that touch point with your tax team and to be able to answer questions and get clarity around some of the items that you maybe had no one else to go to. So some of the things that we initiate are just confirming certain elements of your tax return. Have you moved? Is your filing status the same? Do you have a change in dependents? Things like that. Do you have any new forms of revenue that we can't see on the business? Do you have any new businesses? These are all really important things that as a tax team, it's helpful for us to know about as it's happening so that we can appropriately tax plan before the end of the year when really it's too late. So those are some of the things. We'll also get a temperature check on estimated tax payments. Have you made any? If so, how much? Should you be making any tax payments? As well as a full tax projection. So from the business information, the financials that we have available to us, and the questions that we've asked you about your personal tax picture, we put all of that together and present to you a tax projection of, at the end of the year, this is what you can expect to owe with what's happened so far. Of course, things change, but it's a super helpful check-in of what's happening for the year so far and what is that going to look like if this repeats itself for the second half.
It's been really fun this year. We have created a tax snapshot. So just like we have our bookkeeping, financial management snapshot that comes out each month, we now have a tax snapshot as well. And so we believe that as creatives, we understand how hard the numbers and finances are of the business. And so we want to equip you guys with an easy to read document that helps you understand in the best way. And then, of course, we're here as your money team to continue to be your accountability partner and help you understand more and more over time. All right, Kelsey, is there anything else that we didn't cover today that you want to close on?
If you're feeling like, oh my gosh, after hearing this, I don't think I'm in the right entity type, you can make an update in the middle of the year. So again, that's another option that's available to you. But we hope you found this helpful.
Yeah. If you want that entity analysis, that is something that we offer at KSA Tax Partners. Go to kickstartaccountinginc.com/tax partners to learn more about S Corps, reasonable compensation, our mid-year check-in process, and to learn everything about our framework and how we approach taxes with our clients. I have a favor to ask. If you have gotten any value from this show and you want the show to continue to grow and keep providing you with strategies for financial growth and efficiency, simply leave us a rating and review if you're listening on Apple or Spotify. Those reviews really go a long way in attracting more listeners, and honestly, they really make my day. So if you're feeling up to it, we'd love to see a rating and review from you. Either way, thanks so much for listening to the show.